2026 is shaping up to be a pivotal year for the U.S. economy. A major economic downturn is looming, and it's only a matter of time before it hits hard. But here's the twist. Some states are going to get hit harder than others. While the nation braces for a recession, certain regions are more vulnerable, and they could very well be the first to collapse. As inflation rises, job growth stagnates, and consumer confidence drops, the economic dominoes are starting to fall. Many of the factors that have driven economic success in the past are showing cracks, and those cracks are about to widen. Which states will feel the brunt of this collapse first? Today, we're diving into the 13 states most likely to be hit hardest by the upcoming recession. Buckle up, this isn't just about statistics. It's about real people, real families, and industries that are about to take a massive hit. Before we dive into the states most at risk, let's first take a look at the bigger picture, the current state of the U.S. On the surface, things may seem stable, but there are troubling signs a recession is imminent. Experts predict that 2026 could be the year the U.S. faces a full-blown downturn. Inflation has been creeping up for years. Prices on everything from groceries to gas are rising, burdening many Americans. The cost of living is skyrocketing while wages aren't keeping pace, leaving people struggling to make ends meet. This is affecting consumer spending patterns. The job market is also slowing. Although unemployment rates remain low, businesses are reluctant to hire, and layoffs are becoming more common. The financial market is volatile, with investors increasingly on edge. As they pull back, it creates a ripple effect across the economy. In short, the U.S. is on the brink of a recession, and some states will be more vulnerable than others. Let's dive into the 13 states most at risk. California's economy relies heavily on tech, entertainment, and real estate. The tech sector, once booming, is facing job cuts, reduced investments, and slower growth. Real estate, especially in high-cost areas like San Francisco and Los Angeles, could collapse as demand slows and interest rates rise. The entertainment industry could also suffer as consumer spending tightens. Texas is dependent on oil and gas. When oil prices drop, the state's economy takes a hit. Although energy diversification is happening, it's slow. The housing market in Texas has surged, but rising living costs and potential job losses could cause a market correction, leading to economic slowdown. Florida's economy is driven by tourism, real estate, and a large retiree population. A recession would reduce travel spending, devastating tourism. Housing prices are high, but when the market crashes, retirees on fixed incomes will struggle to keep up with rising costs. New York is deeply reliant on the financial sector. A global economic downturn would hurt Wall Street, causing severe job losses. Real estate costs are high, and any significant downturn would destabilize the housing market, affecting local economies and creating financial instability. Nevada depends heavily on tourism and gambling, particularly in Las Vegas. When people struggle financially, luxury spending like gambling and vacations drops. With fewer tourists, Nevada's economy will suffer, and the housing market could also face a downturn as demand decreases. Illinois faces multiple challenges, particularly in Chicago. The state's manufacturing sector has been shrinking, and the public sector is struggling. Chicago's real estate market is unstable, and with job losses mounting, the state's finances, already burdened with debt, will likely worsen. Pennsylvania is reliant on manufacturing, energy, and agriculture. As traditional manufacturing wanes, the state faces job losses. Energy production, particularly coal and natural gas, is in decline, and with cheaper alternatives on the rise, Pennsylvania's economy could suffer. Ohio's economy is highly dependent on the automotive industry. A downturn in car sales will lead to slower production and job losses. Ohio's manufacturing sector is also struggling to adapt to the digital economy, leaving it vulnerable to a recession. Michigan, the birthplace of the American auto industry, still heavily depends on car manufacturing. If car sales drop, Michigan will experience widespread layoffs, particularly in Detroit. The auto industry is facing challenges from automation and electric vehicles, further weakening the state's economy. Georgia's economy depends on agriculture and manufacturing. Price volatility in agriculture and a decrease in demand for goods will lead to job losses and factory closures. Real estate in cities like Atlanta could face a downturn if the housing demand drops. North Carolina's economy relies on tech, finance, and manufacturing. A recession would hit all three sectors. Tech investments could slow, and financial firms in Charlotte could see reduced profits. Manufacturing, particularly textiles, faces pressure from outsourcing, leaving the state vulnerable. Wisconsin's economy is supported by agriculture and manufacturing, but a downturn in global markets could decrease demand. Agricultural prices fluctuate, and bad weather conditions could disrupt production. As manufacturing faces challenges, Wisconsin's economy will likely suffer. Arizona's economy depends on real estate, tech, and tourism. The housing market, which has been growing rapidly, may face a sharp decline, affecting homeownership and investment. The tech sector, while growing, isn't as strong or diverse as other states, and a recession will hurt tourism. Social and political dynamics also play a huge role in exacerbating economic struggles in these vulnerable states. For example, social inequality is a major issue. Many of the states at risk have large income disparities. When economic hardship strikes, low-income households suffer disproportionately. Workers in industries like tourism and retail are often in low-wage jobs, and without benefits, they have little financial cushion to fall back on. Housing and affordability is another concern. Many of these states have already seen dramatic increases in housing costs. If a recession hits, those with high mortgage debts could face foreclosure, and the real estate market would crash. Political instability in states like Illinois and New York, with budget deficits and high debt, makes it harder for these states to recover. Delayed government response to the recession could make the situation worse. Lastly, public sector struggles will reduce the quality of essential services like education, healthcare, and infrastructure, further impacting people in these states. Despite the challenges, there is hope for recovery. The key lies in diversification. States that rely on a single industry need to invest in emerging sectors like renewable energy, technology, and healthcare. These industries could offer new jobs and economic stability. For example, Texas and California, with their strong tech and renewable energy sectors, could pivot away from fossil fuels. Michigan and Ohio, historically dependent on manufacturing, could expand into automation and technology, creating jobs in the future-proof sectors. Additionally, investing in education and infrastructure is crucial. States must develop a skilled workforce, while infrastructure projects can stimulate local economies by creating jobs and boosting long-term productivity. Through strategic investments and adaptation, states can reduce reliance on struggling industries and build a more sustainable economy. In conclusion, while the recession of 2026 poses serious challenges, especially for these 13 states, there's still hope. The key lies in adaptation, diversification, and investment in future-proof industries. States that embrace change and invest in renewable energy, technology, and workforce development will not only survive but thrive in the face of economic uncertainty. How do you think these states should prepare for the economic storm ahead? Share your thoughts in the comments below. And if you want to stay informed on how the recession might impact the country, subscribe and hit the notification bell. Don't miss our upcoming videos where we dive deeper into the future of the American economy. Stay prepared. Stay informed.